Hello, I'm Gustavo Pifano, Research Analyst at Gabelli Funds. With March Madness in full swing, we thought it timely to offer an update on the U.S. sports betting market and one of our best ideas for 2023, Entain plc. Nearly 5 years on since the U.S. Supreme Court overturned the Professional and Amateur Sports Protection Act and allowed individual states to regulate and tax sports betting businesses, we now have legal sports betting in 33 states and Washington, D.C., representing just over 50% of the adult population. Over 2022, nationwide sports betting gross gaming revenues grew 61% year-on-year, from $4.3 billion in 2021 to $7.5 billion, as Americans bet a total of $93.2 billion on sports throughout the year. New York was the largest market, taking an 18% share of the total GGR, followed by Illinois and New Jersey with 11% and 10% share respectively. For bookmakers, March Madness is the second most important fixture in the U.S. sports calendar after the Super Bowl. According to surveys from the American Gaming Association, a total of 68 million adults plan to wager over $15 billion throughout the NCAA Men's Division I basketball tournament. Three-quarters of online bettors said this will be their first time betting on the tournament online. This brings us back to Entain, which trades on the London Stock Exchange under the symbol ENT. It has 589 million shares out, trading at 11.71 for a £6.9 billion market cap. Has 2.4 billion net debt, 184 million of minority interest for a 9.5 billion total enterprise value. Entain is an online-led sports betting and gaming operator headquartered in England. It operates a portfolio of established betting and gaming brands across 40 regulated or regulating markets around the world and has full control of the proprietary tech behind all of its core product verticals. In a nutshell, Entain is a data-driven technology company deploying the tried and tested business model of a casino. In 2018, shortly after PASPA was overturned, Entain entered into a 50-50 joint venture with MGM Resorts International to launch the BetMGM online betting and gaming app in the U.S. market. The idea of the JV was that MGM would bring its brand and market access, and Entain would handle the technology and back end of the online product. The combination has been hugely successful, and today BetMGM is the U.S. market leader in online casino or iGaming, and they're the number 3 national operator in sports betting behind FanDuel and DraftKings. BetMGM generated an EBITDA loss of $440 million on net gaming revenues of $1.4 billion in 2022. Operating in an intensely competitive market, the JV, like its peers, has focused on customer acquisitions at the expense of near-term profitability. However, management are aiming for BetMGM to be EBITDA positive in the second half of 2023, which is when the contribution from customers acquired prior to then should more than offset the cost of ongoing customer acquisitions. We believe achieving this profitability milestone should act as a catalyst for the shares. We see another, possibly nearer-term catalyst for the shares when the imminently expected UK government's Gambling Act white paper is finally published. Though worst-case potential outcomes from this regulatory review may include curbs on marketing or spending limits on iGaming, we consider much of the risk already priced into Entain shares, and the impact will not be as severe for the company given its proactive, safer gambling initiatives and global scale. Lastly, over the long term, we continue to see the merits of a renewed bid for Entain by its JV partner MGM Resorts. While the U.S. may be the most visible and immediate growth opportunity for Entain, prospects for its core international markets, entry into new regulated ones, and new categories such as esports betting should provide further runway for earnings growth through the medium to long term. Thank you for listening, and please reach out to us with any of your comments or questions.